Hi, everybody, and welcome to Understanding Your Paycheck. My name is Miria Gray. I am the Community Education Officer here at Chelsea Groton Bank. And this session is really for maybe high school students or college students that are getting their first job, they're getting that first paycheck, and they just don't really know what they're going to be seeing. So let's see. All right, so we're gonna go over some vocabulary. So the first thing that we're gonna be talking about is taxes. So it is that word that none of us really like to hear, but it's basically a government fee on business and individual income and activities, products and services that you do. It helps pay for things like roads and buildings and schools and all of the good things that we like about the places that we live. Income tax, individuals all have to pay a tax on their income, salaries, wages, tips, and commissions. In some locations, people have to pay a local income tax or sales tax along with the federal. So in Connecticut, we do have to pay a state income tax as well as the federal income tax. Oops. Vocabulary of earned income. So when somebody says to you, what is your earned income? It's money that you get from working, including all of your earnings, so your commissions and tips. So if you're working as a car salesperson or a waitress or a waiter, for example, you have to pay taxes on the commissions or the tips that you make. So for selling cars, or that you would get from waiting on a table or something like that. Payroll deduction. So this is the amount an employer withholds from a paycheck. So a lot of them might be mandatory, like various taxes. And some people choose to make voluntary deductions like charitable contributions, direct deposits into other financial institution accounts, or loan payments. So for example, you might donate to UCFS or something like that out of your paycheck. You can have that automatically deducted out of every paycheck. You can choose to have deductions made directly into your savings account, or some people have child support paid that way. So there are payroll deductions that you can have. Medicare are taxes that are collected from your current wage that employers use to pay for hospital and Medicare after you retire. So your employer will take it out, it gets put in a general fund, and then when you are old enough to retire, you will be eligible for Medicare, which will help pay for the medical costs after you retire. Social Security pays for your retirement, your disability, survivorship benefits, and millions of Americans rely on those benefits after they retire. We have a whole Social Security seminar that we do. If you're interested in what those benefits might look like, even before you're ready to retire, they're really good about talking about, what age you need to retire at, and what the benefits are going to be depending upon at which age you retire. So you only get Social Security benefits if you pay into Social Security benefits, and it's based on your highest earning year. So whatever you're paying in is, might be whatever you're getting out. All right. So here is a sample paycheck. Maybe a little bit hard to see here, but it's okay. We're going to go through it line by line. So there's two parts to your paycheck. And some of you, if you get a live check, will see this. And if you get a pay stub because you have direct deposit, The live check will just say void across it. But the top half is your physical paycheck. So if you're getting the physical paycheck, that's the top part. The bottom part is your pay stub, and it talks about all the deductions that you have. It's really important if you're going to deposit this check, or even if you have a direct deposit, that you're looking at what the deductions are to make sure that you got paid correctly. So lots of things can happen. You're in a very human environment, right? Somebody is inputting those numbers in manually, and mistakes can be made. So it is really important that you're looking over what this pay stub says to make sure that you're getting paid the correct amount, that the correct amount is being withheld for deductions, and that deposits are being made exactly where you want them to go. So up here is your paycheck. This is the amount that you get paid. That is your net pay, right? What you're taking in. So the way I remember your net pay, the take home pay, is like the fish you catch in a net. That's what you're bringing on board your boat, right? So that's your net pay. That's what you're actually taking home. Your gross pay is how much you make before all of these deductions. Okay, so that is the gross pay. So down here, it should say your earnings. So it'll say if you have regular pay, if you have overtime pay, if you have holiday pay, whatever it might be. It will say how many hours you worked. So in this case, it's regular pay for 40 hours, and the rate is $15 an hour. So you're going to want to check and make sure that all of that is correct. Right? You're going to want to make sure that you didn't actually work a holiday, that you weren't supposed to have some overtime hours, that they have the correct amount of hours that you work there, and your correct rate of pay. And then there'll be a number there. It is $600. So that is the gross pay for 40 hours a week at $15 an hour. Right? So that is $600. But that is not what you're actually going to get in the check. Our check is our gross pay is $600. Our net pay, which is in this check up here, is only $466.34. And that's because of all of these withholdings and deductions that we've been talking about. So I'm just gonna flip to the other side over here, so I'm not scratching across the paycheck. All right, so the first one is the Medicare tax. So as we talked about, the Medicare tax is the tax that you pay in so that you can have healthcare benefits after you retire. It's a federal, it's mandatory, employers are required to take it out. So that one was $8.70 out of this particular paycheck. Year to date, they've paid in $191.40. So they have the current amount that was taken out of this current paycheck plus the year to date amount. The second one is this is the state, so Social Security tax. So it's $37.20 is taken out by the government for Social Security. Totally year to date is $818.40. This is a federal tax of $59.57. And this is a paycheck out of Massachusetts, so it's a Massachusetts state tax. So this one was taken out $28.19. So as you can see, there's some federal taxes, there's some state taxes, and they all add up, okay? So then down here on the bottom, you'll want to look and make sure. So the current amount of your check, 40 hours, $15 an hour, $600, current amount, $600. Current deductions, $133.66. You're going to want to make sure that this amount, that these add up to that current deductions amount. Because sometimes mistakes are made, right? Things happen, and you just want to make sure that this equals that. So your net pay, what you're taking home, is the $466.34 that your check is made out for. So you're going to want to make sure this net pay slot here is equal to the same amount on your check up here. If it's being done by computer, it should absolutely be that. If it's not being done by computer, you definitely are going to want to make sure that all of this is happening. If somebody's hand cutting you a check, like if you're working for a pizza place and they just hand you a blue check that says, you know, whatever pizza place on it, you're going to want to make sure that they're taking out all of these things because they are required to. Make sure that they can tell you like where that's going. You have year-to-date earnings, year-to-date deductions, year-to-date net pay. So when your boss says, you know, you make, you know, $40,000 a year, that is what your gross pay is. Your net pay is actually what you're just taking home. So your year-to-date earnings would be your gross pay, what your employer says that you're making every year. Then you're going to subtract the deductions, and that should equal that. Okay, so hopefully that makes sense. Tax brackets. So as you're getting into the career world, or you're having a job and you're paying taxes, the more money you make, the more taxes that you have to pay. So there are different tax brackets. So we're not going to get too tied down into this chart because I'm going to show you a video that's going to really explain them much better than I ever could. But there are a bunch of different tax brackets. So if you're making, you know, if you're making under like $9,000, if you're making $9,075, it's 10%. If you're making over that, but not over 36, it's that plus 15%, and on and on and on. So I'm going to not explain it to you, and I'm going to let the video explain it to you. Hold on, can you turn the volume?
Our tax brackets for 2019. Simple, right? But many of us make a common mistake when looking at this. Let's say my income is $84,000. You might think that puts me in the third bracket, so I would owe the federal government 22% of my income. This is wrong, and it's causing us to have uninformed debates about tax policy. Here's how it actually works. Let's go back to my $84,000 income. Now, instead of thinking of tax rates as brackets, we think of them as pockets. But first, there's one special pocket we need to talk about. The money we put in this pocket is not taxed. The government automatically lets single people put $12,000 in this special pocket and more for couples. But if you spend a lot of money on things like medical expenses or charitable donations, you can sometimes put in more. These are called deductions. With the $70,000 that's left over, we can start filling up the pockets. The first pocket only has room for $9,700, so I only pay 10% on this money. Then I pay 12% on the money in the next pocket. And then 22% on the money in this pocket. These are called marginal tax rates, and that's how these brackets actually work. So if I get a raise, that new money goes into the first pocket with empty space. When space runs out, we put it in the next pocket. So the raise, and only the raise, will be partially taxed at 22% and partially at 24%. So when politicians say they want to raise the top tax rate, it doesn't necessarily mean these pockets in their money are affected. They're talking about tax rates on the pockets way over there, which are only used once people have filled in these smaller ones. Marginal tax rates are a pretty simple concept. once you get the hang of it.
The last thing that we're going to talk about your paycheck is direct deposit. So when you're doing direct deposit, that is taking your paycheck and having the funds electronically transferred to your checking or savings account. This can help you receive the payments faster and avoid dealing with those physical checks. So, you know, when you pick up your check and then you have to drive it to the bank or take a picture of it or whatever it is to deposit it into online, you can avoid all of those things just by having direct deposit. So direct deposit just shows up in the morning that you're supposed to get paid, and there it is, and you have your paycheck. It really is a much better way and more secure way to get paid. Nobody can steal your paycheck out of your mailbox. You don't have to wait until you can get to your place of employment or back to the bank to make the deposit. Even if you make the deposit through your phone, through your online banking system, by taking a picture of it and depositing it, you still have to wait for a couple of days for that system to clear that check. If you drop into the bank, they will most of the time put your paycheck in without a hold, but through your phone or the app, it doesn't necessarily do that. So the best way to get your pay immediately in the morning, the first day that you're supposed to get paid, is with direct deposit. So when you fill out your direct deposit slip, you're going to need to know a couple of things, and they are going to be what your checking account information is to be able to get paid in there. So for those of you who have never seen a check before or never written a check, this is a check. It will have all of your information on it. So your name, address, state, city, zip are going to be here. Your bank's name is going to be here. Some direct deposit forms ask for a voided copy of a check. So if they ask for that, all you have to do is write void across the middle of this check and then just give them the check. The reason that they're asking for that is because they need the information on the bottom of the check to be able to deposit it, and they want to confirm that the information that you gave them is correct. But if they don't ask for it, they are definitely going to be asking for this information: the bank's routing number. Each bank, not each branch, but each bank, so like Chelsea Groton Bank has a routing number, and it covers all of our branches, as does Bank of America and People's Bank and Dime Bank and Eastern Bank. Every bank has its own routing number, and that identifies the bank that the account is drawn on. So it's going to ask for your bank routing number. And so you're going to want to put that in. So the first number on the bottom of your check is the bank's routing number. It's the identifying number for the bank. If you don't have a check, your bank may have their bank routing number published on their website somewhere, and you can probably find it in your online banking app. Because it's very commonly asked for if you're going to set up a deposit or a withdrawal system from your checking account. The second number that they're going to need is your bank account number. What is the physical account number of your banking account that you want the money to go into? So it can go into a savings account, or it can go into a checking account. I usually have mine deposited into my checking account and move the money to my savings that I would like to put back there, only because there are restrictions. There are federal restrictions about how many withdrawals you can make from your savings account into a checking account every month, but you can put as much money into the savings account as you want to. So it's a little bit more safe to have it deposited into the checking account and then sweep the money that you want into the savings account than to deposit to the saving and make multiple withdrawals from your savings account every month. You may get a flag from your bank saying that you've made too many withdrawals from your savings account this month, and that they're only allowed to give you a set amount. And it is a set amount across all of the banks, so no bank is exempt from that. There is a third number at the bottom of your check, and it is your check number. It will match the number up here at the top of your check. So this number down here, 0123, should match the check number up here, 0123. So there's 3 sets of numbers: your routing number, your account number, and your check number. You probably won't need this check number for your direct deposit, but just make sure you're not including it in your account number. So whatever the numbers are down here that match the number at the top of your check, you're not going to include those. And I believe that is all I had for you guys today. So if you have any questions, please feel free to ask. If you have any questions afterwards, you can feel free to reach out. Miriam Gray, it's mgray@chelseagroton.com.